yeah, we are live. Welcome. Hey guys, great to have you here today for Magic Mondays. And I'm your host, Neil D'Souza, host of the Leadership to Wealth podcast. And we're so glad that you could join us here today on this November 1st. And hoping you guys got some good candy yesterday because, they were giving it out for free. But they're not giving anything out for free. My co-host, as always, Jason Vaz.
Nice to be here. Nice to be here. How's everybody doing? We had no trick or treaters in my neighborhood. I don't know about y'all's neighborhood, but it seems like I haven't had anyone. It's like people keep their kids at home.
Yeah.
I don't know, but
Different times
nobody
for
wants to hear
sure,
me
right?
talk. They want to hear talk.
Who? Tell me, who
The
do they want to
man,
hear?
the myth, the legend, Marlon Yee Man.
What's up, boys? What's up? Happy Halloween.
Great to have you aboard, my man, Jason and Marlon. As always, it is a pleasure. So, here's the question. Because we just did have Halloween, and this is our second year kind of dealing with the pandemic, and of course, Halloween basically got canceled last year. Trick or treaters, and it was pretty sparse for you guys this year. Is that what you're telling me, Jason?
Yeah, no, my neighborhood's a little bit more mature.
Mm-hmm.
There's not a lot of little kids running around, so I expect that to change in the next 2 to 3 years. But I just think that a lot of the kids that live in this neighborhood have now grown up, and they're just not at trick or treater age anymore. Um, yeah, no, it's a little different because when I was a kid and I was going out, it seemed like the whole city was out. But I peeked out my window, didn't see anyone walking around. In all
Yeah.
fairness, I didn't put out decorations either. I didn't buy candy. I didn't really want to give candy.
You sure your house doesn't look like the haunted house, anyways, just from the outside?
I definitely put a sign that said trespassers will be shot. I don't think they took that joke too.
Well, okay. So here's, with regards to real estate and investing. Last week we had a great time, and this week we want to talk about. We're going to have, of course, on the show Chad Griffiths, who is an industrial realtor. He'll be coming up in just a moment. But before we bring him on, Jason, I know that there was something that you want to bring to the viewers today.
Yeah. There's something a little interesting that came in. So this came in from North House, which is a organization that helps those that are less fortunate, those on social assistance, find housing. Now, what some of our viewers won't know, but those who invest in real estate consistently will, is that this is a gray area where people don't like when you're renting out and when you're finding a tenant. You want someone with perfect credit, good income, like pretty much like they're good enough to buy the place. However, that really creates a void for those that don't have those things. They still need a place to live. Now, the reason why we have these, so anyway, what North House is doing is they've come in with the Community Development Council of Durham, and they're basically saying, hey, we're going to take on some of the risk. We're not just going to be here to protect the tenants, we're here to also protect the landlords. So they're offering a couple cool incentives, which I think if you have homes that maybe fit this criteria, I encourage you to explore it. So they're offering $1,000 signing bonus for every signed lease to landlords that rent to one of their tenants, and they're covering up to $500 a month in rent. Now, any of my clients or any of my investors that are watching this are going to be like, Jason, what the heck is $500? I said, yeah, that makes sense. However, if you were to invest in a rooming house, you could rent a room out for $500 and make it cash flow pretty well. And having that layer of protection where there's a third party that handles everything may help. Now, the long and short of why they're doing this, I've said this once, I've said it again. Ontario is it's not a landlord friendly province. They've got a lot of rules in place, and unfortunately, because of their harsh rules, organizations like this need to exist in order to get people into homes. Even AAA tenants are having a hard time finding homes right now. So it's a little sad. It's a little sad that that this has to exist, but it is something that does exist and that we can now utilize, and it can ease some of the stress that you may have when renting out to someone who may not have a AAA application.
Wow, that's really interesting. The very same laws that were meant to protect tenants have actually had an adverse effect, and for people that would have difficulty, man, with these with the Landlord Tenancy Act, it's going to it's already created a serious issue, and now here we are seeing this opportunity from these guys to be able to help these people out that have been marginalized by the very same laws that are meant to help them.
Yeah, no, and it's exactly as you said. It's an unfortunate thing, because you think of tenants, you think of somebody that can't afford to buy, and that is not the case. We've almost got 3 degrees of tenants now. We've got your
Yeah.
AAAs, and these are people that actually could buy your place. They have the money, they just choose not to.
Yeah.
Right? They're like, I'm not sure, I'm not committed to the neighborhood yet, so I'm going to rent for a year, and they're in a good financial state. They are the ones that get the places, because then you got your secondary people who are saying, hey, I make half decent money, I got good credit, I just don't have a down payment, so for that reason I'm going to rent. And then we have these other people who say, hey, my credit's a little bruised, I could definitely can't buy, but unfortunately, because of the housing supply, the restrictions on housing supply, and then the heavy rules, landlords are willing to leave their place vacant for 2 months and find people in the first 2 categories. They're not even considering the third category. So it is what it is.
Wow, love that. Great piece there, and definitely something to for us to look at some more in the weeks, months ahead as we continue to report about all things real estate and investing. And speaking of that, on today's show, we're bringing up Chad Griffiths. He is an industrial realtor out west in Western Canada, and most of us are going to say, well, industrial real estate, we've kind of heard of it, but what really is that? Well, we're going to bring in Chad, and he's going to talk to us about these things, and we're going to find out about both sides of that fence. Who uses industrial real estate? How's it been doing in the pandemic? All of these things. Let's bring onto the show Chad Griffith. Chad?
Hey,
there
Neil.
he is.
Hey, fellas. Thanks so
Hey,
much for
Chad,
having
how
me
you
on the show.
Great to have you on, Chad. So glad. Now, for those of you guys that are watching or you're watching this show, I actually had Chad on my podcast, the Leadership to Wealth podcast, and we talked all things life and real estate. And Chad was a great guest, and so we decided to bring him on the show because he has a wealth of knowledge in the area of industrial real estate, and we wanted to share that with you, here today. So, Chad, we got to just start off with what exactly is industrial real estate, because quite frankly, most of us don't even know what that really covers.
Yeah, it's a great point to start with. I heard someone say the other day, all they knew about industrial real estate is if they got lost when they were driving and they somehow turned into an industrial park and they didn't know where they were. And I think that that's actually a pretty apt way of describing it, because unless someone has familiarity with industrial real estate, whether they worked in the industry or they worked at a factory and were in a building, most people just have had no reason to actually be in an industrial building. I think it's become a lot more prevalent in our minds in the last decade or so, as we've probably all seen an Amazon fulfillment center go up outside of the airport. We're seeing these massive distribution centers being built everywhere. So I think people have a vague idea of what industrial real estate is. I like to give an example that everybody has actually been in a warehouse, because a Costco or a Home Depot is actually really just a warehouse. It could be 150,000 square foot building. But if you look carefully when you're inside one, that's really high ceilings. There's racks of goods that are getting sold that go all the way to the ceiling. There's very little office in there. It's really just a big warehouse. It just happens to be in a retail location. And there's a massive parking lot, but that really is a warehouse. So I like to break industrial real estate because it's a very broad category. I like to break it into those three subcategories. First would be the warehouses. Those are the ones that everybody's probably somewhat familiar with now. Then you've got all the manufacturing properties. So those were all the buildings where things are made, produced. One that's probably notable as of late would be like a big Tesla gigafactory. These massive buildings that are being built to build the Tesla vehicles. That's essentially just a large manufacturing property where all the raw materials get brought into the building. There's an assembly line. There's people that are working in there. The end product is the Tesla cars, which then get shipped out. Those are on the large end of the spectrum of a big industrial property, but they can go all the way down to a small industrial condo of 2,000 square feet. So that'd be the manufacturing side. And then the third would be flex properties. And that's kind of the catch-all group that's used to describe all the properties that are going to be zoned industrial, but aren't necessarily geared specifically for manufacturing or warehousing. These can be all kinds of things: bottle depots, churches, light storage, self-storage, anything that's not in that category that can be neatly defined as manufacturing and warehousing would be categorized broadly as that flex property.
Oh, interesting. So, for instance, I've looked at some storage property, and I've always just called that commercial, but that would actually fall under the area of industrial real estate.
Yeah, there's a little bit of nuance there as well because the zoning for self-storage, and it can vary from municipality to municipality, but a lot of the self-storage that I've seen is actually zoned industrial. So there might be zoning ordinances depending on where your market is, where it could fit under commercial, but the vast majority of the ones that I've seen are actually zoned industrial. So it's kind of one of those curious questions: is what makes an industrial property? Is it a property being zoned industrial? Is it the use? Is it an industrial use that makes it an industrial property? Those are where you start getting into those little nuances where there's not a neatly defined answer. That's why I say that flex category is more meant to cover all those broad topics, whereas the vast majority of industrial will be that manufacturing or warehousing.
Okay. Well, I want to ask another question about industrial, but just before I jump into that, because obviously we've got our man Jason Vaz here, who is a residential realtor, and he helps out with he gets into commercial as well. But who exactly is calling you when it comes to, as you as a realtor? Because this sector is just a very different sector. Is there really a like how do people know to call you when they're looking for something like that?
It'd be a very similar process to what Jason's doing, putting together buyers and sellers of property. I'm putting together buyers and sellers of industrial property, but there's also the leasing side, which is very prevalent. And that's all the tenants that need to lease space and all the landlords that have space that they want to lease. So it's very similar. Our job is matchmakers. We're trying to combine two parties to ultimately enter into an arrangement either to buy and sell the property or to lease the property. And there's a wide assortment of tenants out there. I think the biggest thing that people are surprised about when they start looking into industrial real estate is just how vast the industry actually is. And what I'd encourage someone to do if they have a curiosity or a little bit of interest in industrial real estate is just block off a little bit of time on a Saturday or Sunday. Identify in your city where the industrial parks are, because most industrial parks are going to be segregated into their specific areas. And there's a whole lot of zoning reasons for that and planning reasons on how a municipality wants to keep those isolated from the residential areas. But just identify where those industrial parks are in your area and just physically drive up and down the streets and just take note of the buildings, take note of the tenants that are in there. And you'll be shocked at how much business is happening behind the scenes, because these by design are actually tucked away outside of the public view. So you don't see all these businesses unless you have a reason to. But that'd be the first thing that I actually recommend to someone that's interested in industrial, is just to broaden your horizon and get a sense of how large the industry actually is. And Toronto's a perfect example. Like, the greater Toronto area is about 1 billion square feet worth of industrial real estate. If you let that sink in, like 1 billion square feet of industrial real estate, and your vacancy rate right now is under 1%. So 99% of this billion square feet is being leased. Well, who's it being leased by? If you were to just take a drive through some of the industrial parks, you don't need to cover them all, but just going up and down a few of those streets, taking note of some of these businesses, you'll see large businesses. You'll see a business that might occupy 500,000 square feet, and then you might see a building that's broken up into 22,000 square foot condos, and each one of those condos is going to be occupied by a tenant. So it really is a remarkable exercise just to see the scope and the scale of how many tenants and owners of industrial real estate are in the market. We actually just have to physically go out and do that if you don't have any familiarity with it.
Yeah, wow. Well, I can say that I have actually, in fact, done some of that. I sort of like going into some of the industrial areas because you find some really interesting companies in some of these places that specialize in some interesting, whether it be cabinetry, flooring, all sorts of unique stores you can find in some of these industrial parks when you do drive around. So I would definitely agree that that's a great exercise just to get an idea on that, because you're right, it is normally tucked away. So now here's the question. I mean, we've seen here in Ontario and really across the country what's been happening in the residential market. It has been blowing up across. It's just been going crazy across the country. What has industrial real estate been like for you guys through COVID?
Yeah, great question. I mean, and there's that saying that I've heard a lot over the last 18 months or so, is that beds and sheds are the two industries that have done quite well. Beds being the multifamily and residential, and the sheds being the industrial. A crude way of describing all industrial. Industrial, like everything else, I think if you go back to mid-March of 2020, that was a rough patch for industrial, where there was just uncertainty for everything. People weren't sure of how many tenants would be paying their rent, how many companies could even weather the storm. And then we started to see all those government programs come out early April, and that stabilized things. So we probably had a month or two where there was very little activity, and then things steadily progressed. And it's been a very busy, called 12 to 15 months now, where we've seen absorption pick up. We've seen vacancy rates drop significantly in a number of markets, big markets like Toronto, even in the US. If you look at some of those coastal cities like Los Angeles, New York, the big port cities, they're also sub 3% vacancy rate right now. So it's gone to the point that it's actually hard finding space, especially in big markets. It's very hard finding it. And one example I could point to is Prologis, who's the largest industrial real estate owner in the world. It's a real estate investment trust. They're headquartered in San Francisco, but they own high quality warehouse space all over the world. They released a press release the other day saying that they're essentially out of space. They have nothing to lease in their billion square foot portfolio. They're saying that they're essentially out of space. So if you look at the largest industrial owner in the world making that type of announcement, they almost act as a bit of a bellwether for the whole industrial landscape. So that should be an alert on how demand right now is outpacing the supply and the ability for these developers to add supply. So that's probably the biggest trend that we're seeing right now, is that the companies that want space, especially in these really hot markets, Vancouver, Toronto, coastal cities, it's really difficult to actually get something. And you guys all know from just basic supply and demand, if you have more demand than you have supply, you're going to see prices increase. So that's why, going back to Prologis, their stock is so I started buying Prologis stock at $100 in January, and by then it was actually already up 40 or 50%. But I just saw this trend developing where there's going to be massive space constraints. This morning, their stock's at $143. So in the course of 9 months or so, their stock has increased another 40, 45%. And that's because their top line rental their top line revenue, which is being driven by rental growth, is seeing that increase, right? That's just, if tenants have to lease space and there's very little available, they're going to be willing to pay a premium. So I wouldn't say that that's necessarily a blanket statement that we could apply across the whole board. But when you have the biggest industrial landlord in the world seeing that rental growth on all of their leases, then you have to think that at some point this is going to trickle down. So I think that really summarizes the market right now, is that because of all the factors that are driving industrial demand, and we could get into that as well, but it's safe to say that there is a lot of industrial demand right now, limited supply, or supply at least that hasn't kept pace with this demand. It's led to increases in rental rate. So it's a good time to be a landlord. It's not necessarily a good time to be a tenant.
Wow,
I got a question, Chad.
Brilliant. Come on, Marlon, go ahead.
Yeah, I got a question. So, something we've seen in the residential space is that, once, supply gets tight, we've seen the condo market grow, right? You can't build up this way, you got to build this way. So what I've seen in industrial, I used to follow a lot of industrial stuff because I used to be in the wealth management side. I know Prologis, great company. So, I don't know who builds the industrial. So I'm just curious, like, is there specific builders who build industrial parks or projects? And two, is there a possibility that we could see industrial buildings go higher instead of, usually they're 2 or 3 stories, right? They're not very tall. If there's not enough, especially here in Ontario, where we're landlocked, is that something you see maybe happening here in the Toronto GTA or Ontario in general? Just curious.
Yeah, both great questions. To the first one about the developers, there's a full spectrum of companies that are doing it. And again, I'd go back to if you delineate industrial real estate into those subcategories, you could also delineate it by size. So if you're looking at somebody developing perhaps a 50,000 square foot building that's going to be used as condos, you might see smaller and medium-sized developers get into that space. Well, that's probably actually more what you're going to see is those smaller and medium-sized developers. But as you start getting to these large buildings, like if you're looking at someone building out an industrial park or distribution center that's 1 million square feet, that's almost all going to be institutional grade money. So you might have a pension fund that's partnering with a local developer or just a big developer in general, but it really is dependent on the size and on what's being done. But it's everybody. I've seen residential developers get into industrial development for their first project. They just do a small, call it a 30,000 square foot multi-tenant industrial building, all the way up to massive pension funds. So a full spectrum on that. Second question, which is also a great question, is that some of these markets, especially like the coastal cities or the market where there's just geographical impediments, I think that's the word I was looking for in that, such as like a lake or mountains, or it's just already built out and there's just no room to grow. Vancouver is a perfect example of that, right? Where they've got ocean on one side, they've got mountains on the other side. They're constrained so much. Their land has just already reached a point where they're just running out of land. So when you're into a market like that and you can't even find parcels to buy, then the only choice is to either go more inland or to look into those multi-level buildings that you're talking about, Marlon. And we are starting to see that in these tight land constraint markets. We are seeing buildings that are being designed. And I think that there's even one, I believe it's Seattle, if I remember correctly. If it pops up, I'll make a note of that. But they are designing, engineering a building that is going to be designed for 18-wheelers to essentially go up a ramp and have a multi-level warehouse so they can take advantage of going vertical on those tight land supplies. So I think we will see more of that because it'll get to the level where the increased cost of having to build up will be less than when it costs to actually get the land and have the footprint on there. In markets like mine, where theoretically we could build in every single direction, I don't think we'll see that anytime soon because it's cost prohibitive when you can get land on the outskirts of the city. But in those markets, and I wouldn't be surprised if you guys in Toronto see a multi-level warehouse go up in the near future as well, for those exact reasons you mentioned, Marlon.
Awesome, thanks, great answer. Sorry, what city are you located in?
I'm in Edmonton.
Edmonton. Okay,
yeah.
Got it. Yeah, lots of land out there.
Yeah, we could go in every direction. There's no stopping us.
Yeah.
Well, Chad, let me ask this from an investor standpoint. Because we know the demands that are out there for residential real estate. We understand the demands that are out there for multifamilies and even commercial to a certain degree. And from what you're saying, it sounds like a best kept secret is industrial real estate is in heavy demand. Is there a way for investors to really look at that and go, maybe this is a market that I want to look into, and trying to decide, hey, where could I potentially build? Or do you really want to get a partner in there before you start building a facility? Do you build first and then find the tenant, or do you find a tenant and then build?
Yeah, great question. And I would say anybody considering industrial real estate is to first recognize that there is a barrier to entry, and that barrier to entry is just knowledge and comfort, right? If someone's considering multifamily, they probably already have a pretty good familiarity with it. At the very least, they understand what it is, right? They understand who the tenant's going to be. Whereas industrial real estate is just more complex, and it's more complex because people don't have that familiarity. So the first thing that I'd say is if you are considering industrial real estate, go back to that point I made earlier about just starting to understand the market, driving through it. That's step one, but also be prepared that there's a series of steps that need to happen before you're going to have a level of comfort to invest in it. And something I've said before is that industrial real estate should actually scare new investors. And I know that that's probably the antithesis of what a lot of brokers would say to someone when they're trying to sell them a property. But I think having a healthy amount of fear is actually a good thing because it can prevent you from making a mistake that could be devastating, especially if you're a small investor and this might be like the first big investment that you're making outside of maybe some multifamily. Have that healthy amount of fear, because if you are going to go into the with being skeptical and perhaps even a little cynical on what could go wrong, I think that that's actually a good thing, because you're gonna take that much more action to ensure that you're prepared. I think you mentioned there as well, Neil, is to have a partner. I think that that's actually a really good idea. Somebody that's done industrial real estate investing, that you could perhaps be a capital partner with them, or at least piggyback on their knowledge. And maybe it's a mentorship arrangement, or you're getting some consulting, or however it is. I think having somebody that's done it before in your corner can help alleviate a lot of those potential pitfalls. Might not necessarily alleviate all of them, but I think if you can mitigate your risk on that, you should approach industrial real estate with the understanding that there can be considerable downside risk if you make a mistake. If you do it properly and you're prudent and you've got a lot of steps in place and you've got a team behind you, such as a lawyer, accountant, a broker, a banker, if you have a good team around you, you're minimizing the potential mistake that you can make, but there still is risk, like there is with everything. But I think if you're prepared, if you study the market, if you're patient, if you're prepared to invest a considerable amount of time to really understand what industrial real estate is, and then also dive into the local market, so you get a really good understanding and a deep, thorough understanding of what the local market conditions are, and you've got a good team, then I think your likelihood of having success in this industry is much higher. Going back to that original point about there being barriers to entry, I think that that's actually a good thing, because there's just less competition in it, because there's less people that are prepared to invest that time really getting a sense of what this industry is. And then there's other benefits with industrial real estate, which I think are really attractive. And when I was listening to the news article that you guys were referencing at the beginning of this show, and you're just talking about how unfriendly your market is for residential landlords. I think that's a ubiquitous issue across all markets, where the government will always tend to favor residential tenants over residential landlords, or at least they'll put more of a priority on helping them. With industrial real estate, you're just dealing with contract law for the most part. There were some markets that had eviction moratoriums over this past 18 months, but I actually didn't even hear about any of those coming to fruition. But if you're looking at the industrial market, provided you can go through and get into the industry and have that level of comfort, for the most part, you're dealing with longer term leases. The management is much easier to deal with. You're not turning over a tenant every month like you would in a, call it, 40-unit apartment complex, and it's just much more management friendly. I own some industrial property myself, and there's one building that I've now had for 7 years, and I bet you I've been to that building 5 times in the last 7 years. And the rent comes in every single month. If there's an issue, it's a absolute net lease, so they pay all the increases in property taxes and insurance. I know what my rent coming in is every single month, and to me, that benefit of having that predictable cash flow without having the hassle of dealing with all the issues that people who own multifamily are all too familiar with, I think that outweighs the drawback of it. And for me, that's worth spending the extra time to do. But I know I'm going to sound redundant saying this. Until you get to that level where you're comfortable doing it, you should have a little, not even a little bit, you should have a lot of fear, because this industry can really take people's money away from them if they aren't prepared to make a smart investment decision.
Wow. All I heard was you don't have to deal with getting a phone call about a broken toilet in the middle of the night.
I've in all the properties that I own and all the over the whole period of time, I've never dealt with a single call like that.
That's great. In truth, I've never had to deal with that either, but that's because the phone calls go to someone else. But Jason, let me ask you: do you have any questions for Chad? Because otherwise, I've got one last question.
You're on mute.
Okay, good stuff. All right,
You're on mute, bro.
Okay, so Chad, I actually think that what you're talking about there with regards to the barriers to entry, taking this is not a game to take lightly, right? Like, it's as much as everyone talks about having fun in real estate, enjoying real estate investing. It's not something that you want to play, or you want to be playing in. You want to actually be doing the proper due diligence, getting the proper team in place, like you talked about, and even more so in industrial real estate, where the numbers are exponential. And if you do it wrong, you can really do it wrong. So I actually think that what you're talking about there actually sounds really sexy. It actually sounds even more exciting, because if you're willing to do the work, if you're willing to put in the preparation to it, then you can actually there's really lots of opportunity there. And it sounds like lots of opportunity going forward as well, especially in this change in our, not just Canadian markets, but around the world. We're seeing this change where there's so much that's moved to online buying. So much of purchasing is moved to online that it's really changing the game to, with that respect. And I think anyone that's been watching Amazon or Shopify or any of these guys can see that drop shipping and all of this stuff has really blown up. And so the need for industrial real estate only continues to drive up with that.
Yeah, I agree. And if you even look at a company like Amazon as an example, just look at how the supply chain works from product getting overseas to your house, which is how it's getting delivered in 2 days now, right? When the product comes, it's probably made in a manufacturing property, call it in China. Then it might get sent to a warehouse where it's waiting to go onto the port. Then it comes across in a like a big Maersk ship like I've got behind me here. And then it's probably stored in a warehouse on a port city. Then it's going to go by either rail or truck to somewhere middle of the country. Then it might stop in one warehouse there. Then it might get sent by truck to a warehouse, that last mile delivery idea where things are going to, that last mile is the hardest one to get to the customer's house, but it's probably going to go to another distribution center within 15 minutes of your house, and then it's going to get delivered to your house. But that whole supply chain, that whole value chain of getting product from overseas to your house might involve 4 or 5 warehouses. So that's why you're seeing this big run up in big distribution space all over the world. It's not isolated to the major markets. There's big distribution centers going up all over the place, and that's not just for Amazon. All the big retailers are ramping up their inventory to hold more stuff so they can get it to you even quicker. That's what's really fueling this boom. And if you buy into the notion that e-commerce is going to continue eating away at market share from the traditional bricks and mortar retailers, then you have to think that this is something that has a long trajectory to continue growing. And I've read a few reports recently that think easily the next 5 years we're going to continue seeing increased demand. Supply will catch up at some point, so it might not be as lucrative as it is right now, where you're essentially like a near zero vacancy rate. But this still does have a long way to run, in my estimate, before we start seeing a pullback in it. So it's an industry that I not just work in as a broker every day of my life, but it's one where I've got the majority of my investments either directly invested in industrial real estate, or even the stocks that I own, I've got stocks invested in industrial real estate. So it's something that I live, breathe, and sleep all the time. It's just industrial real estate.
I love it.
I got one last question, Chad, if we got some
Yeah.
time, Neil. So
One last
one thing
question.
one thing we like to talk about here is the crypto. We like to talk about the crypto industry. So I have some friends who are actually miners, and they've all moved out west to Edmonton, Winnipeg, and I know they're buying industrial buildings out there and for the purposes of mining. Because you guys have favorable energy prices. I think you even get the discount for the more energy you use, you get bigger discounts versus out here, the more energy you use, the more you pay. I'm just curious if you're seeing any of that in your portfolio of people coming in and buying industrial units to mine crypto.
We are seeing it. We actually came close to doing a deal with a big crypto company, but what we actually ran into were just the enormous power requirements that they needed to actually power all their servers. So just real quickly, because this was fascinating to me as well, and I don't want to dive too deep into power because it's a topic I'm not an expert in. I've got like a rudimentary level of knowledge on it. So if I confuse something on here, this isn't on my intent, but this will be my interpretation of the electrical engineers that they had hired. What they had told to me on it is that the amount of power that they needed was quoted in megawatts, and when it was converted into amps, which is how most buildings will display how much power that they have coming in, it'll be amps and wattage. They needed 16,000 amps. And the building that we tried to do a deal on had 1,600 amps. So they needed 10 times the amount of power that was in this building. And when the electrical engineers were reaching out to the energy provider here, they basically just said it's impossible. They're like, that's the amount of power that's on this entire block, servicing this entire block of companies. And you want to have that much power brought into this one particular building. So for them, it was prohibitive just by the amount of power that was even available. And from my understanding, and I've yet to do a successful crypto deal for that reason, that is the biggest impediment that they're facing is trying to actually come up with a building that can supply that amount of power. I know that some deals are happening. I don't know if they're just integrating or somehow tapping into that power grid where they can get power that isn't conventionally available to other tenants. But that is the biggest problem with crypto from an industrial real estate standpoint is being able to supply them with the power that they actually need to get all those servers going.
Thanks for the insight. Awesome. I was just very curious about that. That's all. Yeah.
Wow, Chad, it's a pleasure as always, to have you on the show. So knowledgeable in the area and even helping break it down for us in a really a simple way for all of us. So thank you so much, Chad. Guys, if you want to get more of Chad, you can of course go to Leadership to Wealth on YouTube. You can find our interview, my interview with Chad. And Chad, if people want to reach out to you directly, what's the best way for them to do that?
I'm pretty active on LinkedIn, and I've got a YouTube channel where I talk about industrial real estate as well. So either one of those are great. And I'll always reply to email. It's just griffithscre@gmail.com. Send an email, and I'll get you an answer back usually within a day or so.
Love it. Love it. Well, guys, on behalf of us here at Magic Mondays and Chad Griffiths, we're so glad that you guys could join us for another show here. And we'll see you guys again next week for all things real estate and investing.
Thanks, fellas.
Next week. Nice, Chad. Thanks.